Alright, if you care about markets, even a little, stop scrolling for a second. Because something just happened, and it's not noise. Silver is moving like it knows something you haven't priced in yet. And no, this isn't Reddit hype or another to-the-moon fantasy. This move lines up with a real shock that hit the global system fast. A 25% tariff announcement out of the US aimed at South Korea just lit a fuse, and silver reacted immediately. The wild part? Most people are watching the wrong thing. They're looking at the price chart like it's entertainment. They're not asking why. Stay with me because I'm going to show you why silver isn't acting speculative right now, and how you can spot this pattern before it shows up in headlines. If you're holding silver, you're ahead of most investors. If you're watching it, you're in the right place. And if you've been ignoring it, your job is to understand what this signal means, because it's telling us something about what's coming. Now, before I explain what caused this surge, let me teach you something most people don't really get about silver. You probably hear precious metal and think it behaves like gold. Sometimes it does, but silver has a split personality. It's money when things feel unstable, and it's a workhorse metal when factories are humming. That means when the global system gets stressed, silver doesn't just react emotionally, it reacts mechanically. Think of it like a bridge that's carrying both commuter traffic and freight trucks. When pressure hits from either side, the strain shows up fast. And right now, pressure is hitting from both directions at once. That dual role is what makes silver so interesting to watch during trade disruptions. Gold is the fear trade. Silver is the fear trade and the industry trade at the same time. So what does that tell us? It tells us that silver's price isn't just reflecting investor sentiment. It's reflecting real supply chain pressure and real safe haven demand simultaneously. When those two forces converge, the move tends to be sharp, not gradual. And that's exactly what we're seeing. If this is making sense so far, drop a comment and let me know where you're watching from. I want to see how global this audience really is. So here's what's actually happening, and I want you to follow the chain of events because this matters. When a 25% tariff drops on a major trading partner like South Korea, you're not just talking about politics. You're talking about immediate cost increases across autos, electronics, pharmaceuticals, and advanced manufacturing. Those costs don't disappear. They either get passed on to consumers or production slows down to absorb the hit. Now here's the cascade most people miss. As production costs rise, demand for silver doesn't fall. It often rises because silver is embedded in those supply chains. Solar panels, semiconductors, electric vehicle components, medical devices, they all use silver. You can't just swap it out. There's no cheap substitute that works at scale. So manufacturers who were already operating on thin margins now face a choice. Do they eat the cost? Do they raise prices? Or do they scramble to secure supply before costs climb even higher? That scramble shows up in the market as buying pressure. But that's only the first layer. At the same time, confidence in the global trade system takes a hit. Investors start asking uncomfortable questions. Can supply chains be trusted anymore? Are trade rules stable? Or are we entering a phase where tariffs get weaponized regularly? And when those questions start circulating, silver's other role wakes up. Safe haven demand kicks in. Now you've got industrial buyers competing with investors, and both are moving at the same time. That's the convergence. And it doesn't happen slowly. It happens fast, because uncertainty accelerates decisions. People don't wait around when the rules of the game are changing. Now let me break down why this convergence matters so much, because I want you to see the structure clearly. The primary driver here is the tariff shock itself, sudden, aggressive, and leverage-based. This wasn't a negotiation. This was a unilateral move designed to create immediate economic pressure, and the target matters. South Korea isn't some minor player. They're a critical node in global tech manufacturing and automotive supply chains. When you disrupt that node, the ripple effects hit everywhere. The secondary confirmation is how quickly industrial metals and currency markets reacted together. Copper moved, aluminum moved, the Korean won weakened. That tells you this isn't isolated to one asset class. It's a system-wide repricing. And the convergence proof? Silver outperformed gold in percentage terms during the initial move. That combination doesn't happen randomly. When silver gains faster than gold, it's usually signaling that industrial demand fears are amplifying safe haven flows. It's the workhorse and the fear trade firing at once. But here's the part that should make you nervous if you're ignoring it. This kind of move tends to front-run broader financial stress. Silver often moves first, quietly, before equities or bonds fully catch on. It's like a smoke detector going off before you see the flames. And historically, when silver breaks out ahead of gold and does it on industrial catalyst news, it's not a false alarm. It's a warning that the market is starting to price in disruption that hasn't fully materialized yet. That's why I'm watching this so closely. It's not about the price today. It's about what the price action is forecasting for the weeks and months ahead. Now let me show you why this isn't new. This is the exact same playbook we've seen before, and if you know the pattern, you won't be surprised by what comes next. Go back to the early 1970s when trade tensions and monetary instability collided. Silver didn't drift higher, it snapped higher. The Bretton Woods system was crumbling, currencies were unstable, and trade wars were escalating. What happened? Silver went from under $2 an ounce in 1971 to over $50 by 1980. Same pattern we're seeing today. Structural uncertainty combined with industrial demand. Look at the late 2000s during the global financial crisis. Silver lagged at first, then exploded once systemic risk became undeniable. It went from $10 in 2008 to nearly $50 by 2011. Why? Because when trust breaks down in financial systems, silver becomes a parallel store of value. And even during the 2018 to 2019 trade war cycle, silver surged when tariffs shifted from negotiation tools to weapons. Every time global trade moves from cooperation to coercion, silver reprices fast. The larger story here is that silver doesn't wait for permission. It moves when the system creaks. And right now, the system is creaking. Now let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this fade? Of course. Markets overshoot all the time. Headlines get walked back. Tariffs get delayed or revised. And yes, there are always claims of manipulation in silver markets. Some of that has merit historically. There have been documented cases of price suppression, concentrated short positions, and questionable trading activity. But here's the thing. It doesn't actually matter whether this move was pure fundamentals or whether someone got squeezed or whether algorithms amplified it. The mechanics are what matter. You focus on what you can control. Watch price behavior. Watch volume. Watch cross-market confirmation. If silver holds gains while risk assets wobble, that tells you something real is happening under the surface. If it gives back the move completely in 2 days, then yeah, maybe it was just noise. But until proven otherwise, you treat the signal as legitimate and you stay alert. There are probably 3 types of people watching this right now, and I want to speak to each of you directly because your situation matters. Maybe you're already positioned in silver, and you're wondering if this is finally the move you've been waiting for. If that's you, your job isn't to get greedy. It's to stay disciplined and watch for confirmation, not euphoria. Don't start calculating retirement based on one day's move. Watch whether this holds. Watch whether other indicators confirm the thesis. Watch whether the news cycle amplifies the trade narrative or moves on to something else. If this is real, there'll be time to add to your position strategically. If it's not, you'll be glad you didn't chase it at the top. Maybe you're skeptical, thinking this feels overhyped or overblown. That's fair, and honestly, I respect that stance. Your edge is patience. Let the market prove it to you. You don't have to buy the story on day one. You can wait for follow-through. You can wait for the technicals to confirm. You can wait for more data. Just don't dismiss the signal entirely, because that's how people get caught flat-footed. Stay informed, stay critical, and if the evidence builds, be willing to adjust your view. The worst mistake is being so committed to skepticism that you ignore what's right in front of you. And maybe you're brand new to this, just trying to understand why silver even matters, or what any of this means. If that's you, focus less on price targets and more on the signals. Tariffs, supply chains, currency stress. These are the clues you'll use again and again. This is how you learn to read market structure. You don't need to predict the future. You just need to recognize the patterns when they show up. And the more you pay attention during moments like this, the better you'll get at spotting them early next time. So here's what I want you to answer in the comments. Which one of these 3 are you? Are you positioned, skeptical, or learning? Because I want to tailor future content to where you actually are in your journey. Here's where I stand, and I'm going to be straight with you. I'm not calling for chaos, and I'm not chasing hype. I'm watching structure. Let me tell you what I'm personally watching right now. First, I'm watching whether silver continues to outperform gold during risk-off days. If we see more trade headlines, more volatility, more uncertainty, and silver keeps gaining faster than gold, that would confirm the industrial demand fear is real and growing. Second, I'm watching industrial demand indicators tied to tariffs. If manufacturers start hoarding silver, or if import data shows supply chain adjustments, that validates the thesis. Third, I'm monitoring policy language from both Washington and Seoul. Does it soften or does it harden? Do we get negotiations or do we get escalation? Because that'll determine whether this is a one-week story or a multi-month shift. Based on my analysis, this tariff shock wasn't random or emotional. It was structural. And silver's reaction wasn't speculative. It was fundamental. The dual nature of silver, safe haven and industrial metal, means it's uniquely positioned to react to exactly this kind of disruption. The fundamentals driving this move haven't changed. Supply chains are still stressed. Trade policy is still unpredictable. Industrial demand for silver is still climbing due to green energy transitions and tech manufacturing, and safe haven flows are still active because uncertainty is high and trust in traditional systems is fragile. If history rhymes and silver consolidates above key support levels while building momentum, the move that follows could be substantial and sustained. I'm not giving you a price target because I'm not a fortune teller, but I can tell you that when silver breaks out on a combination of industrial and safe haven demand during periods of systemic uncertainty, the historical moves have been significant. I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said. Check the data yourself. But if you're paying attention right now, you're doing what most people won't do until it's too late. If you made it this far, you're someone who actually thinks critically instead of reacting emotionally. That mentality will serve you well in markets, in life, and in every decision you make where information matters. Share this with someone who needs to see it. Subscribe if you want more analysis like this, and stay ahead of the curve because that's where opportunity lives. Think critically, verify your data, and make your own decisions. Stay sharp out there.